Today's news, the Euro USD is close to the parity level again. Good morning and welcome back. Now the parity level in case of Euro USD refers to an exchange rate where one currency equals to another. For example, in this scenario, 1 euro would equal 1 US dollar if the euro dollar comes down to the parity level. At the time of making this video, the Euro USD exchange rate currently is sitting at 1.02, meaning that 1 euro equals to $1.02. The main reason for the euro weakening and the dollar strengthening comes from the interest rate differential. The interest rates in the US remain elevated, whereas in the eurozone it's deflated. And that's because of the stark contrast between the two economies. The US remains superior to every other developed countries in the whole world. As you can see from the 2 and the 10-year Treasury yields, the US is offering almost 4.7, 4.8% on the long end of the yield curve at the 10-year Treasury yields. But if you look at the eurozone, the interest rates and the funds rate are much lower than its counterpart in the US. And if you're an investor, which investment would you take? One that offers you 4.7% return or one that offers you, let's say, 3%? Of course, you would take the higher interest-bearing asset. And in this case, the US is going to be always on top of all the other developed economies. And that, my friend, because there is a huge demand for US government bonds, especially now that the FOMC and the Federal Reserve confirmed that there will be no rate cuts, or they don't expect rate cuts in the first 6 to 8 months of 2025. It's a guaranteed yield for investors who buy the US government bonds. And if they buy the US government bonds, these are denominated in US dollar, and therefore the demand for US dollar is going to increase as opposed to the euro. And all the euro traders have to exchange their currency to dollar to buy the US government bonds. And this is why the US dollar is strengthening against the euro. And in my opinion, the interest rate parity level is inevitable, and it will come again after 2 years and 2 months again. And now that we discussed the fundamentals, let's look at the technicals and see if we have any entry opportunities to enter into this juicy trade. So pulling up the euro dollar chart on the 4-hour time frame, you can see that the euro dollar is on a downtrend for a long time. As I explained at the beginning of the video, the reason why the dollar is strengthening against the euro or the euro is weakening against the dollar is because of the interest rate differential. So you can see that the US is offering, as we speak right now, 4.766% on the long end of the yield curve, which is the 10-year Treasury yield, and the eurozone is well below. So let's look at the Germans and the French. It's 2.5, 2.2% on the short end of the yield curve. But doesn't matter which one you look at, you can see that there is a massive gap between the two economies. Now, going back to the chart, I'm expecting the dollar to continue to further strengthen against the dollar. One of the reasons is the Trump policies. Now, Trump is very pro-dollar, so he wants to make sure that the dollar remains the global reserve currency. Also, the Trump policies are said to be very inflationary, and one of the biggest fears of the Federal Reserve is the fiscal policy-induced inflation by Donald Trump. If inflation starts to rise again, the Federal Reserve or any central bank in the world is going to raise interest rate. And if they raise interest rate, the dollar is going to be much stronger. And because of this dynamics and macroeconomics, this is why I'm expecting the dollar to continue to strengthen and the euro-dollar pair to reach interest rate parity again. And now we're moving down into the technical analysis part, because technicals are used to find entries and not to generally predict market trends and directions. It's only to use for entries and exits. So you can see that if you draw a trend line, you can see that the direction is definitely downwards. And the next thing you want to look at it is the weekly and the daily pivot. You can see that the weekly pivot is at 1.03000 and the daily pivot is a little bit lower at 1.022. You have to look into smaller decimal places to be perfectly exact, because the pivot's only showing me to 2 decimal places. But when you look at the chart, you're going to able to identify the weekly and the daily pivot, and you can identify the weekly general trend. Also, you can use Fibonacci from the last swing high to swing low, and you can see that it almost lines up with the 50% Fibonacci level and the 38.2. So my sell zone is going to be around at this area, and I'm actually in a position as we speak, entered with the members in Discord. I entered into a sell position on EUR USD, and it's about the current price level, and my stop loss is a little bit wider, but if you look at the profit potential to the downside, it's still worth it, because you have a 1 to 5, 1 to 6 profit potential if entering at the current price level. If you want to add more technicals, you can look at that how previous support level now is going to become a resistance level. So you have 3 or 4 confirmations from a technical side that this is going to be a very good entry zone for a sell continuation. And to add more confirmation on the fundamental side, if you look at the Fed Watch tool, which is a forecast or showing the expectation of traders and when do they expect the Fed to cut interest rate, you can see that in January, March, May, June, July, less than 50% of traders expecting 6 months ahead that the Fed is going to cut interest rate. So for the next 6 to 8 months, it's guaranteed that the dollar is going to strengthen because of the interest rate differential I talked so much about. And from this perspective, all the fundamentals and all the technicals are showing me the same exact thing, is that the euro is going to weaken against the dollar. But this is not an investment advice, because anything is possible in the markets, and you have to look at what data is coming up, because remember that one single data set can change everything. So looking at the economic calendar, you can see that we have PPI today in the US, so you need to watch out for all the US and all the eurozone data. And tomorrow is going to be an even more important data, which is going to be CPI. For the UK and also for the US, we have the core CPI and the headline CPI. Now, if you want to trade with me, if you want to see my trades, if you want to get a notification about my trades, go to alphafx.eu and enjoy a flash discount where you can join for £199. That includes access to all the morning briefings, which I do live in most of the mornings, but you can access the recording as well, and you get access to my early signals and entries if I enter into a trade. Remember that this is not financial or investment advice. I'm purely showing my trades, and you are solely responsible to make your decision on your own. If you enjoyed the video, make sure you hit the like button, subscribe. Thank you so much. This is the AlphaFX.